Hello investors, welcome to Simpli Stocks. In today's video, I am going to share 10 interesting businesses that FIIs have recently added to their portfolios in Q1 June quarter. Now, over the last 3 to 4 months, the market has shown a very good recovery, which has set up a great base for the next bull run. So, in such a scenario like this, the investment actions of FIIs give us a very good idea where foreign investors are exploring ideas for the upcoming bull run. So today we will look at shareholding patterns of these businesses and also discuss the growth triggers which are playing out in these companies. And the best part is that except for just one stock, which is an SME, the Q1 results for all others have been good. So today's video is going to be quite interesting. With this, let's quickly get started. Now, the first business we will look at is GNG Electronics. GNG is in the business of refurbished laptops and desktops. The company buys old laptops and computers, repairs them and refurbishes them, and then makes them as good as new. Then after quality testing, they sell them to their customers also with a warranty. Now, the trigger in GNG is that due to the boom in AI and data centers, components like RAM, SSDs and processors, so they have become very expensive. Fabricating companies are now supplying these chips to AI and data center companies because they get higher margins over there. So because of this, there is a shortage of memory and processing chips and prices are rising. So this is driving a rapid increase in demand for refurbished laptops and desktops because they are cheaper for companies and corporates. And as a result, G&G is benefiting directly from this. So amidst all this, the promoters recently sold a small part of their shareholding to FIIs and DIIs, but that is nothing wrong because they had to do it anyway. SEBI rules require promoter holding to be below 75%. As a result of this, FIIs increased their stake from 2.8% to 5.3%. Among FIIs, Goldman Sachs was a buyer, while Mirai, ITI, and Motilal were buyers among DIIs. The second business now is CGCL or Capri Global Capital. Here we saw a buying of 2.5 percentage points. Now CGCL is in the gold loans and it is a beneficiary of the rally we have seen in the gold prices. Now, although there has been a slight correction from the January highs, but if you look at it from a long-term perspective, yes, gold has rallied significantly. So as a result, the demand for gold loans is also increasing because with the higher gold rates, a customer can get a bigger amount or a higher loan amount with the exact same quantity of gold. On the other side, banks and NBFCs earn higher interest income by giving out larger loans. Thus, there is a very strong tailwind across this entire segment. Everyone from banks to NBFCs is rapidly expanding their gold loan books. So in line with this, CGCL has also built a very strong, very large network of 1,000 branches across the country and it is growing well right now. Next on our list are two data center proxies, KRN and Aeroflex Industries. The data center segments of both these companies are growing very, very fast. Both KRN and Aeroflex manufacture cooling products for data centers. The difference, although, is that KRN is in air cooling systems, whereas Aeroflex manufactures parts for a new technology called liquid cooling. So, where coolant is delivered directly to the server racks via hoses or pipes to keep them cool. Good growth is coming in both the companies, and Q1 was a breakout quarter for both of them as growth has accelerated even further. Now, let us look at the shareholding pattern. So KRN, it recently raised 350 crore rupees through a QIP for its expansion, and this fundraise happened at a share price of 1060 rupees. So because of this, you will see a slight dilution in promoter holding, while FII holding increased from 6.7% to 8.9%, and Indian institutions holding has increased from 6.4 to 8.3%. Similarly, if you look at Aeroflex, the FII holding here has more than doubled, going from 1.5 to 3.6%, mind you. But the issue, see, with KRN and Aeroflex is that you wouldn't get the valuation comfort over here. The market has already priced in the growth for the next 1 to 2 years. But I also feel that just as we saw a bubble around defense and green energy in the previous bull run, so data center proxies or businesses, let us say from some other trending sectors, so they will boom in the next bull run. So we should see these businesses going to P's of who knows even 140, 150. So that is why I feel that there is still some scope left in them, because if you see On a forward basis, they are currently trading at a PE of 75. It is not cheap, I will say, but I will also say that it is not also overpriced. But I would like to add one more thing here, because I don't understand why retail investors constantly seek validation from FIIs and DIIs, or they wait for the confirmation of these institutions. See, it is a great thing that institutions are coming in these businesses now, but these businesses were good even before that. For example, right from GNG to Capri and other businesses also that I'll be talking about today later in the video. So I have been covering them for a very long time in our Simpli Stocks community and also on our channel. And not just that, we closely track more than 100 such good businesses for you in our Simpli Stocks WhatsApp community. We do detailed discussions on everything, right from their business models, valuations, risk factors, financial results, and to also what triggers are playing out in those businesses. Here, I also share my portfolio and clear all your doubts on a one-to-one basis. But please remember, this is a paid community and there are two plans, 6,000 rupees for 6 months and 10,000 rupees for a full year plan. In the 6th month plan, your effective monthly cost will be 1,000 rupees, and in the annual plan, the monthly rate drops to just 850 rupees. So if you are interested, you can send me a WhatsApp message on this number, or else you can also contact us and join the community using the link given in the description below. Coming back to our discussion, now apart from data centers, the power equipment market is also booming right now. So let us take a look at Yash High Voltage at number 5 for us. So this is a very moated, specialized business among SMEs. Yash is a transformer ancillary business, and they manufacture a component called bushings that goes into transformers. So if you have ever paid attention to a transformer, you might have seen such parts. So these are called bushings, and in transformers, electric current enters and exits through them only. Now they are bringing capacity for RIP bushings. That is a separate kind of bushings which have a better margins. So for this, Yash raised funds, as a result of which you can see that FII holding here has increased from 0.6 to 2.2%. And apart from Yash, RR Cable is also doing very well within the power theme. I have been tracking this business for a long time now. Until now, most of their sales came from wires. Whereas when we look at other players like, let us say, Polycab or KEI, cables are the main revenue contributor for them. And margins in cables are better than they are in wires. So now RR is also expanding into cables, which is why along with good sales growth, the margins are also expanding. Therefore, even though in Q1, volume growth was just or about 17% for them, their EBITDA almost doubled compared to the last year because of margin expansion. So seeing this opportunity, foreign investors have also increased their position in RR. In the 3 months from April to June, they increased their holding by roughly 1.6 percentage to reach 10.7%. Now, moving forward after power sector, let us take a look at two businesses from the jewelry sector, PN Gadgil and Sky Gold and Diamonds. In PN Gadgil, just like in GNG, some stake was transferred to reduce promoter holding. So you will see that promoter holding has reduced from 83.1% to 76.6%, with FIIs being the major buyers. FII holding went straight from 0.5 to 4.7%. Similarly, DIIs also picked up a 3.1 percentage points stake. Currently, Gadgil is quite also attractive in terms of valuation and growth. And I had discussed this in our previous video also on jewelry stocks. So you can watch it if you have not seen it yet, because the business itself is doing well after that, the trouble we saw in Q4. So overall good business, and that is why institutions have taken such a large stake. Right now, after Gadgil, the second jeweler and today's 8th business is Sky Gold and Diamonds. Sky Gold is going through, I'll say, institutionalization. The company has become large enough that FIIs and DIIs are comfortably entering in this business, and they are increasing their stakes over here. Like over the last 1.5 years, institutional holding has doubled. Similarly, in the June quarter 2, you will see that FIIs added about 1.6% more stake and DIIs added 1%. And you will notice this, that institutional investors enter very few small caps because they simply don't get enough liquidity. And you tell me yourself, like above 10 or 12,000 crore market cap, how many businesses you will find that can grow this fast? So in such a scenario, it is highly likely that this business can undergo a re-rating. And while PNG is a retailer like Kalyan and Tanish, Sky Gold manufactures jewelry for them. So there are several triggers in Sky Gold because of which this business can easily grow its bottom line at 40 to 50% CAGR over the next 3 to 4 years. Now, moving ahead, the second last business on our list today is Shally Engineering. Shally is part of the GLP-1 theme and manufactures such pre-filled injection pens and drug delivery devices for pharma companies. Now, semaglutide has gone off patent in India and also several other countries like Canada and all. Semaglutide was originally brought for type 2 diabetes patients, but its off prescription usage has also gone up. People who are obese or they are looking to lose weight have also started using it. Now, when a drug goes off patent, its price drops dramatically. So if mass adoption of this drug happens, this semaglutide and all happens in India and Canada, so Shally will be a big or major beneficiary of it. So the GLP-1 theme can be a mega trend, which is why institutional interest is building up here. And you can see how FIIs have increased their shareholding from 3.1% directly to 18.2% over the last 2 years. And in this quarter alone, there was a buying of 1.5 percentage points. Additionally, DIIs have also made heavy additions to their positions. So you can explore this business as well. They are also entering the advanced plastic segment for electronics and semiconductor sectors. Although for some people, yes, they might complain that valuations for Aeroflex or Shally are at premium, but you need to understand one thing here, that firstly, these are high growth businesses. And then they also have certain moats or specific advantages in their respective fields, which is why the market is willing to pay such a high premium or such a premium. So you should not automatically reject a business just because you see a high PE. You have to back engineer and see why the market is giving high PE. That is there. Now, in the end, let us look at Jammu and Kashmir Bank. J&K Bank has been a silent, I'll say, outperformer from our watch list. It is also part of Mukul Agarwal's portfolio. And you will see that here also there was a marginal buying of 1%. Initially, it benefited from a write-off reversal gains. And since then, its growth rate has also accelerated. Because as a turnaround story, I'll say that this bank once struggled with heavy NPAs, but asset quality has improved a lot now. And also advances growth right now is at 25% plus. What has happened is that in the Union Territory region, development projects and tourism are increasing. So both corporate and retail credit demand is strong over here, over there. So that is the case. So these were, I'll say, that 10 businesses that are on the radar of FIIs for the next bull run. You can explore them on your own. And if you are new to our channel, make sure to subscribe to Simpli Stocks, because these days we are bringing back-to-back videos analyzing Q1 results and con calls for all these companies. And lastly, if you found this video interesting, please do give me a thumbs up. If you support us with your likes, we will be able to bring more videos to you on a regular basis. And if you have any doubts regarding these businesses, feel free to ask in the comment section. With this, I'll see you in the next video. Happy investing.